stereotypes, breaking the rules. You can't tell me what is for me. Yeah. You got a lot more behind those pretty eyes, but you gotta let the world see. Yeah. So shake it up. Now is the time while you waiting. You look good enough. Now is the time while you waiting. What are you waiting on? Don't let them bring you down. If they ain't rocking with you, so what? Yeah, you're gonna be cool without them. Don't let them bring you down. If they ain't rocking with you, so what? Yeah, you're gonna be cool without them. Oh, don't let them bring you down. Don't let them bring you down. Oh, don't let them bring you down. Don't let them bring you down. Don't believe all that you see in magazines. Filtered images so blinding. Yeah. You weren't designed just to be somebody's dream. Find your voice and break the silence. Yeah. So shake it up. Now is the time while you waiting. You look good enough. Now is the time while you waiting. What are you waiting on? Don't let them bring you down. If they ain't rocking with you, so what? Yeah, you're gonna be cool without them. Don't let them bring you down. If they ain't rocking with you.
Welcome to the Retirement Learning Lab. My name is Van Richards, and this is the daily NASDAQ market update. We had a mixed day in the markets today, and we're going to give you a little bit of an update on that. And there's three other things that we're going to do today. One is we're going to talk about two particular stocks. We're going to talk about analog devices, and we're going to talk about Adobe also. Those are significant stocks in the NASDAQ 100. The NASDAQ, remember, is the index of 3,500 over-the-counter stocks. It's not really an exchange that's like maybe the New York Stock Exchange. It's all done electronically from that standpoint, and that's one that we've significantly covered. But today, let's just start into talking about what's going to go on. We're going to talk about the valuation. We're going to talk about the ESG attributes of some of these different stocks, and we're going to cover dividends if those are things that exist in the stocks that are here. So let's get right into it and talk about what happened today. As you can see, actually around the world, most of the markets were up. Let's look at actually what was going on in the United States. The Dow Jones Industrials was up about 1.3%, the S&P 500 a little bit more than a quarter, and the NASDAQ actually lost about 0.39%. As we go over and look at the European indexes, the FTSE 100 was 0.31 up. The other indexes were up. The Euronext index was down 0.44%. And when we shift over to looking at the Asian indexes, the Nikkei index was down 0.39%. Hang Seng was down a little bit over 0.5%. And the Indian is up. The Shanghai index was actually up about 0.75% also. So let's look at actually what happened today and bring it into the perspective of the three stocks that we're going to talk about. If you look at the graph that's in front of you right now, you'll see that the NASDAQ is actually in green. You have to get real close at your screen if you're going to look at actually what the NASDAQ, I'll just tell you what the colors are. You can follow along from that standpoint. But the NASDAQ 100 is in green. ADI, which is Analog Devices Incorporated, is going to be in red. That's on top. And Adobe is in blue. That was actually the laggard for the day. So let's take a look a little bit more at what's been happening with these stocks over the past week. You'll note that Adobe's actually been the most volatile stock throughout the week. And you're going to see that the valuations, as we talk about that just a little bit later, are influencing some of the volatility that exists. You're going to find that traditionally, when you have stocks that have higher valuations, that's the wrong way to say it. When they're overvalued over top of their normal value, they exhibit a lot more volatility. And when we contrast these two stocks, we're talking about analysis versus Adobe. The idea is that Adobe, you're going to see, is going to be a higher valued stock. It's going to have a higher price to earnings ratio. And you're going to see also that it's going to be a much more volatile stock. When you look at the company like Analog Devices, it's actually trading closer to its actual valuation, and it's not quite as volatile. Now, that doesn't always happen, but it happens quite significantly. Let's look actually at what happened in Adobe today. Now, a lot of you already know what Adobe is. I use Adobe. You bring up a PDF file. We use them all the time. If you look at Adobe's website, it says that their mission statement is to move the web forward while also giving web designers and developers the best tools and services in the world. Now, they may be overvalued, and we'll look at some of the numbers in just a little bit, but they have a significant ability for. And one of the biggest reasons is, as we go forward, if we go and we look at the 10K, which they register with the Securities and Exchange Commission, and then we go all the way down and we look at page 43 on the 10K, you're going to see that one of the most significant reasons why that Adobe is continuing to be profitable is that 40% of its revenues comes from subscribers. They have some they sell, but most of their profits are coming from the regular annual or monthly subscriptions that subscribers have that use their services. And those services tend to be pretty sticky. They happen automatically, they're bank drafted, and that's where most of it's happening. Now, a lot of people might have thought that companies like Adobe's been around for quite a long time, that they may be running out of steam, but they're really not. They're actually part of what's driving the tech world in itself. You look at the blue arrow in that you see here, over 2018 to 2019, they were up about 26% in revenues. And there again, most of that revenue has been driven by subscriptions in itself. Now, if we look at actually what's happened with Adobe over the past 6 months, it's been pretty good. You can look up back here from the standpoint of what happened when the market fell around February and March, and it's recovered quite well from that standpoint. There's not a lot of news that's coming out right now about Adobe, other than the fact that this Wednesday they will be participating in a tech conference that Oppenheimer is hosting. So be on the lookout. There's something new that's going to come out from that. There's not anything significant that's expected, so just keep an eye out on that. The next stock that we're going to look at really Analog Devices, and Analog Devices is a semiconductor manufacturer. This is a great stock. I love this stock. One of the biggest reasons you'll find out in a few moments. But they have a significant foothold in the semiconductor business. The only other company out there that does more business than them is Texas Instruments. And they're making leaps and bounds forward. If you look at what happened over the past 6 months, it's been volatile too, and you can see what happened right around in here where my cursors are running around. In February and in March, we saw some volatility, but they've actually done a pretty good job about regaining back into the market in itself. And one of the best things about not a lot of tech companies pay dividends. Good one. This is 2.13%. That is exceptional. Notice before I didn't talk about dividends with Adobe because Adobe is one of those companies that doesn't pay dividends. And if you're a retiree and you're looking for dividend forward, this is not going to be like a bank or a money market, but if you're looking for dividends, this is a good dividend paying stock. Now, I'm not saying you need to run out and buy it because you need to look specifically at what your investment situation is, but this is a pretty good stock to keep in mind at 2.13%. Now, that might be affected more as time goes by because what's happened is that we've seen Analog Devices has acquired Maxim Integrated Product, and it's going to be a pretty big deal. It's going to take probably about 2 years before it all gets integrated in. But Maxim Integrated Products does not declare a dividend, whereas that Analog Devices does declare a dividend. So when they mix together their assets, it's a good possibility that that might affect what's happening to the dividend. So we'll just have to hang on and see what happens from that standpoint. It's will make, and I mentioned it's one of the biggest, that they're one of the biggest chip makers that's out there, and they're driving the market right now. They're only second right now to Texas Instruments, and really makes this company unique. You might think, okay, I don't want to get too much money into stocks that are in tech because tech is just, it's going to be overweighted. Well, that's kind of an overstatement of what's going on. That would be like saying that at the beginning of the century, you didn't want to be in industries. You wanted to be in agriculture or something like that. Everything was in industry. It was an industrial revolution from that standpoint. That's what I'm getting at. We're in a tech revolution that's being driven forward by what's happening with the pandemic and all around the world right now. There's a lot of different types of tech. When we talked about Adobe and we contrast that with Analog Devices, they're both tech companies, but they don't do the same thing. If you look at Adobe, Adobe's more software company. They don't make anything. They just are a software company. On the other hand, when you look at Analog Devices, they actually make things. They make devices in itself. They make the chips in there. And the thing about Analog Devices is that they have a huge customer base. David Zinsner used to be the CFO. He's the former CFO, and before he left, he had an interview that he did. Actually, I believe it was with Jim Cramer, and in that interview, he highlighted the fact that ADI has over 100,000 customers, and not one customer represents more than 10% of the revenues. Not only that, they have over 30,000 products. Oh my gosh, you could imagine 30,000 products. That's huge. Their diversification is huge, and their footprint in the chip industry is huge also. That means that their profitability is diversified, so they're not dependent upon one particular area from the standpoint of tech. Now, if we go back and we think about Adobe also doesn't make just one particular software. They have many different softwares. And if you think about the number of people that they have that are subscribing, that also adds to the internal diversification of a company like that. So when you talk about diversifying in tech, it's not just that there's one company that does one particular thing. It's not like that they just make widgets and that's all they do. They do a lot of different things. Now, one thing that I do have on the bottom of the screen that might throw a little bit of a monkey wrench in the valuation of this company is that there's a law firm that's invested was fair to the shareholders. And I think what they're looking at is to whether that the Maximum Integrated Products shareholders are getting a fair valuation for their stocks. So as I said before, this is going to be something that's going to take a little while to go through. It'll be about 2 years really before we see Analog Devices that's going to be integrated with Maxim. So we'll just have to wait and see actually what happens. When we look at what the analysts are saying on these two, it's really a stark difference when we say one company versus the other, even though they don't do the same thing. When you look at what's the fair valuation, now this is information from Morningstar, and it's not perfect. It's not guaranteed. It's just saying this is what their projections are. They're saying that the fair value of Adobe right now is $350 per share, whereas today they closed at $443.29. So they are overvalued, and from that perspective. And when we look at a couple of the other numbers in a moment, you're going to see that there may even be some internal purchasing and selling going on inside of this company that's indicative of the fact that they're trying to take profits at this point in time. When we compare this to Analog Devices is not as overvalued or projected as an overvalue as Adobe is. The fair value right now on Analog Devices is put out at $106 per share, whereas the close today on Analog Devices was $116.76. Now, this is really telling. The graph that I've got up here right now shows you what's happening with the insiders in the company. Now, it might be really not very easy to see. You might have to really zoom up on it on your screen, but look at this from the standpoint. In the last 3 months, you can see the number of sellers and the number of buyers who were insiders. These are people who are working within the company in itself. And it was a pretty even, there were 12 buyers and 13 sellers. I don't know whether they were the same person or not, but there's a lot of different reasons from that standpoint. Over the last 6 months, it's been about the same thing. Out of the last year, it's been pretty even from that standpoint. So there hasn't been a lot of out of balance selling going on inside of Analog Devices. Now, to contrast that, let's take a look and see what's going on at Adobe. In the last 3 months, there have been a lot of insiders selling Adobe. Now, if you looked at the numbers that were projected from Morningstar previously, Morningstar is saying that this stock is overvalued more. And I think that you're seeing some of the people who are actually working for the company that are taking that advice. I'm not it, but I'm saying that's what they're doing. They're looking at this from the standpoint, maybe not looking at Morningstar's information, but they're looking at it and saying, I think that I need to take some of the money off the table at this point in time. So take that as it may, take it for whatever you think it's worth. I think that over a very long period of time, Adobe is still a great stock that's out there. Not telling you that you should go out there and buy it or sell it, but I think to keep that in perspective from the standpoint, if you're a retiree and you're looking 30 years down the road, or you're looking 20 or 10 years down the road, this is probably a company that's going to do pretty well from that standpoint, because it's a significant part of the tech industry. And it has actually, as does ADI or Analog Devices, they have what's called a wide moat. A moat in investing is this: if you don't have a lot of competition that's out there that is really you, that will take away your business, then you have a wide moat. If you have a good avenue for selling your products and you have good possibilities for profitability, you have a wide moat. If you have more competition out there where you might be losing business, then you have a narrow moat from that point of view. So when you hear someone talking about the moat of a company, that's actually what it means. Okay, let's look now at ESG. ESG stands for environmental, social, and governance. And to a lot of people, this makes a big difference. The chart that I threw up here on the screen tells you all the companies that are in the NASDAQ 100. Now, we don't put the names up there specifically, but what it's doing is it's telling you that there are 3 companies that are in nuclear power, 3 that, they create genetically modified products. There's 5 that create weapons, 11 that do animal testing. The good thing about ADI or Analog Devices, and the good thing about Adobe is they don't do any of these bad things. They don't do any of these bad things. When we look more specifically at the information that comes out of MSCI, MSCI does ratings on companies, and they also look at what some of the ESG attributes are. Adobe is exceptional. MSCI gets into more of the particulars, and they say that the company has more opportunities in clean technology, which perhaps, but on average, they've done exceptionally well in corporate governance, in carbon emissions, in developing human capital, and also in privacy. And that's a really big thing in the tech industry. They've also done an exceptional job in renewable energy and in marketing ethics. Now, click on over there and we look at analog devices. Analog devices equally well. A lot of tech companies are very friendly when it comes to ESG. One place that MSCI stands out really is in sourcing. Now, when I say sourcing, what I mean is when analog devices, when they make their products, they have to have raw materials to make their products. And all along the way, there are the possibilities for some sort of pollution that exists that's in there. And the way that that's broken up, I don't want to get too geeky into this, but the idea is you can call it scope 1, scope 2, and scope 3 emissions. I have actually a slide that I want to throw up here and show it to you. And I apologize for reading, but this is a really important one. When we're talking about scope 2 are the emissions of companies that come from the manufacturing of their product. And in the Philippines, they reduced their scope 2 emissions at ADI by 68%. That's a really big number. They reduced their greenhouse emissions gases by 68%. They do an exceptional job in the ESG realm in itself, and it's a good company to keep in mind if ESG is something that's important to you. Okay, well, that brings it to an end for today. If you have any questions about any of the things that we talked about today, just to remind you, one of the things that we do is we help people to create retirement plans so that they won't run out of money during retirement. And also, if you have a leaning toward making a portfolio that's more friendly toward the environment, social and governance, then we can help you to create that too. If you'd like to talk to us, go on over to Richard's Financial Planning. And if you look down to the middle of the page, you'll see schedule a call. Click there and you can schedule a time to take a few moments and we'll set up a time to talk. Thanks a lot for listening, and we will talk to you. We can get to this point. Have a great day. We'll talk to you tomorrow.